Sandip Sabharwal is with us on the show to discuss his outlook on the markets and more. Sandeep, hi there. Good to have you on board. Let's start up by discussing the outlook on Z. Clearly, one of the big overhangs seemed to be out of the way. Brokerages upping the target price, calling it a re-rating candidate. Do you believe that now the road ahead looks comparatively smoother for the ever volatile Z?
So, in terms of the uncertainty, I think that goes away. So, I would think that further legal challenges will be tough for the merger process. The issue now, investors who want to invest in this company afresh have to grapple with are that do you want to be in a business which seems to be on a secular decline? I think the general entertainment genre, as satellite TV goes or as TV channels goes, I think it's on a decline. They will continuously lose advertisement share as well as pay revenues, and the costs will still remain high. They'll have to spend on more on the OTT front, which would be not profitable in the near term. So I think it's a tough business. It's not an easy business. So I would believe that the rally induced by this merger is a good exit opportunity for those who have been holding on to the stock for a long time.
Right. Although on Z, CLSA's note, they've put a target price of 300 on Z, saying that Z will make a filing now with ROC, shares will be delisted and merged with the company and then again be relisted. They're saying that Sony is going to be holding the majority, 50.86% of the merged company, and Z founders are going to hold a little under 4%. And then the NCLT, in an unconditional verbal order, has approved the merger with Sony, and that's a big trigger according to them. Page Industries, that's the other one which is in focus. The company has remained cautious on calling for a pickup, actually. They cited continued volatility. There were some signs of demand, remember, some green shoots in the first quarter. Having said that, they're pretty confident of that 19 to 21% margin ahead as focus remains on cost control for them. It's an underperform from Macquarie on Page Industries, a target price of 30,000. So that indicates a significant downside from the current market price, that of 40,000 plus levels. Sandeep, you've been tracking Page for a while now. What did you make of the earnings trajectory that we've seen, not just the Q1 performance though?
So I think the state of the consumer sort of consumption basket is similar across the board. There have been some small pockets of positivity, but overall consumer sentiments are down, and that's reflected in the performance of Page also. Now, Page had set itself up for a much higher growth, which has not played out, and that's the reason it took a big hit last quarter in its profitability. We've seen some revival now. Obviously, input cost pressures are much lower for them, and that's helping them. But demand revival still seems down the line, and inventories in the system seem to be high. It's not a cheap stock. Like at I, w- I think it at the current projections, the valuation should still be around 70 times earnings. So there's no case for buying at these prices. If stock corrects and we then move near to the festival season and we see better prices, then we can consider. At this price, I wouldn't be a buyer.
Okay, that's the view coming in on Page Industries.
Sandeep, wanted to get your perspective on this, in fact. The announcement from the governor yesterday on the ICRR, a knee-jerk reaction for the overall market and banks in specific. But then it's only temporary in nature. It's going to be revised and revisited on September 8th.
Yeah, it is. So but then I think we need to track inflation dynamics, and it's not sure. We're not sure that RBI will reverse it or continue with it. What it does to the essentially this on this move. Now, the bank names have already been under pressure because of tightening liquidity and them having to go to more term deposits to raise money. Now, this will add to the pressure. Now, overall, I think the issue with the banking sector, it's like with IT last year, is that it's a very over-owned sector today because IT was not doing well. IT banking tend to be the fancied sector, so most traders and investors have loaded up hugely into the banking stocks, and that creates a scenario for underperformance in the near term. So I think we could see still some underperformance from the banking sector over the next few weeks.
What do you make of the fact that the Prime Minister himself yesterday has given a stock-specific tip? PSU पे दावा बोलो, दाव लगाओ.
Both are two different things. Dhawa bolo ya dav lagao.
And with
PSU पे दाव
specific
लगाओ.
names, HAL and LIC. Stock specific tip.
Yeah, I don't know what created. I don't know why that was done, but I think there are two very different stories. HAL is on a secular growth path with stronger outlook. LIC obviously is on a secular decline with losing market share. So I think there are two ends of the spectrum.
The other number which I think is worth revisiting actually would be Hero MotoCorp. Is the magic from Hero MotoCorp missing? It's India's, I mean, it's like a powerful brand, high impact brand, a brand which has seen the peaks and the turfs and the twists and the turns. Yet Hero MotoCorp finally, I mean, it is still struggling to get its mojo back, Sandeep.
Yeah, Hero MotoCorp, unfortunately, is a company where the management over-promises and under-delivers. It's been happening for the last so many quarters. In fact, you go and look at their quarterly commentary after every result. They say there is going to be huge revival, volumes are going to revive from the next month itself, whereas the ground situation does not indicate that. And I think that has created dissonance between the company and what the investors think, along with the other controversies going around the company. So I think there's no great story out there. Now this Harley Davidson booking news is there. Let's see how that plays out. That will be a small part of their overall business.
Sandeep, on one hand, there's Page, on the other, there's Trent when you talk about branded retail, right? Excellent set of numbers. Once again, upgrades kicking in, irrespective of the expensive valuations. I mean, Nuvama has got a target price of 21.19. MS has also raised its target and also the FY24 to 26 estimates by a good 3 to 6%. Continues to be a buy for the ones looking at a long-term investment, irrespective of the valuations?
So I think for those who are holding, there's no reason to sell. For those who want to buy, I think the stock is very expensive. So for the stock to go do very well from here, it needs huge earnings growth to happen, which is something which looks tough in the near term. But it's been one of the exceptional performers on the retail side, where it's been able to defy the slowdown which other retailers have seen and continue to grow. I think that holds it in good stead, and that's helping the stock hold up to at these levels. But I think for fresh entry people, I think some patience is required.
So Sandeep,
let's work hard.
Let's work hard. Where are you working hard? What are you picking? 10 years from now, I don't know when you and me would be there, but stock markets would be there. But if you have to pick a stock for next 10 years, which could add zeros, not on the left-hand side, but on the right-hand side, which one would that be? I'm specifying the direction of the zero. People get confused these days when I ask this question.
See, it's very tough to make all these predictions, and I stopped doing it a long time back, because in the quest for trying to buy into companies which will go 10 times, sometimes you lose money. So the aim is to identify companies which can do well, and once they do well, they surprise you on the upside, and when they surprise you on the upside, they generate huge returns. So I think that's happened in a few companies in the recent past. I can remember like companies like Wonderla Holidays, which we bought, or Titagar Wagons, etc. I think some of them, when there's a paradigm change in the growth prospects of the companies, then suddenly the valuations move up, and along with earnings growth and valuation up move, then stocks give return. So I think it's tough to make such prediction what will do well over 10 years. I think we have to just try and identify better companies which we think will do well.
get in a take then, Sandeep, as to what your entire outlook is on the likes of a PVR as well, PVR Inox, and the space as a whole. Given the fact that now it seems that content that's a lot more favorable is working out, we're also seeing quite a few big films to have hit the cinemas.
Avan, it's so strange that things have totally reversed over 3 months. Like from where a scenario where nothing could go right to where everything is going right for them. I think a movie after movie is doing well. New movies are getting accepted better, and we are seeing much stronger response from. And to that extent, that debunks the entire theory that OTT has taken over and people will never go out and watch movies. So I think it's all a matter of content, etc. And PVR Rhinos, I think they're in a very good space because of their dominance in the Indian market today. I would still think that the stock is cheap relative to longer term prospects. So all of us have realized that there's going to be cyclicality in performance. It's not going to be secular growth. And to that extent, the valuations we would like to give would come down slightly. But at these prices, there still seems to be value.
Sandeep thinks, who would be the Rajnikant of the market, Sandeep, according to you?
It's again the same question.
No,
I
not
find it
future,
very
current.
tough one.
Not future, current.
Who is the Rajnikant?
Yeah.
I don't know.
Think. We have all the time.
Nikush thinks it's Reliance, Sandeep. I don't know if you agree or disagree.
No, not on. I wouldn't agree on Reliance because I think that's a stock which has created wealth for a lot of shareholders, but it's not something which I would say that it's a clean buy or it's always done well. I'll think over this Rajnikant front and get back to you.
Going for the movie?
Jailer?
Yeah.
No. Not Jailer.
I'll tell you, Sandeep will go for Oh My God 2, Akshay Kumar's. I'm sure.
My friend's been pinging me that, let's long
Yeah, I'll
before,
go,
let's
I'll
go.
go.
Yeah, and the reviews are good, by the way, Sandeep.
Yeah, I saw that. That's what I'm planning.
But the
Same.
hit
Let you go. Make sure to hurry and book that OMG 2 tickets because seems like that's also going to go off the shelf pretty soon. HCL Technology.